Welcome to TradeTheMBI.com. This is John's reports for the 1st of October. What a nice end to the month relative to, I guess, your position on it. So if we go back just a fraction here, right at the peak of the market, we recognize the falling of the magenta below the 33 level, which took place just a couple of bars before the full signal. The next day, we ended up with the yellow dipping right at the 33 and just above the ABM, and we said below the ABM, you want to be short this market. Sure enough, we got the cross of white above red, which was the beginning of what we would consider a sell signal. The attempts to buy back, fine, but still within our short configuration. And pointed out that once we reached the white over magenta, history told us that we should at least expect to move to the 50% level minimum. And once that selling started, that was aggressive. It got bought back up. We saw the turnaround of magenta coming back, so we knew that there would be a rise. But as soon as we were getting the rise and they were just building for what could have been a decent run, we got the effect of what we call a spider, where this pops up the green above cyan, and then cyan starts to peek back up, and it forms just like that diamond that you would see on a Black Widow. And in this particular case, also we had the white move above, and when the white pivots like this above that 33 level, our expectation is to the zero. And so we were talking about a move, and this began at the even before the open on this day just a few days ago. And I was like, well, that's a call to the 0%, and lo and behold, we ended up with that massive down day. They tried to fight back, but as soon as they hit the 50, it got rejected and pulled down. They did it again. This time we have rising 50% and rising 0%, so it moves the downside target up just a fraction to that 42, 43, 50 right there. And sure enough, couldn't hold that, and it just, the selling started, and once it began, it was going. Now, of course, you had agreements on budget, stopgap measure that passed, but not on the debt ceiling limit. So this is some of the risk factor the market is weighing, but more or less the sell signal was in even before any of that stuff was happening. And this has just been what I described would be one of those situations where it would take only a couple of days to wipe out all the gains people had seen for months. So low right back here is right at where the 0% was, so we're now slightly above it, right at the close level of back in July. And that should be a point where we would expect to see some serious interest in. If not, that opens up a window for a lot worse, down to the 4,000. Still not what anyone would consider a major move. This is a tiny percentage relative to the magnificent increases we've seen. And most of it, though, is a direct result of just the inflationary potential buildup that the market was pre-pricing into moves. But if you move from a hyperinflationary to a stagflation or quasi-deflationary potential, like in Japan had, things get a lot harder to justify where values are at. That's why the NASDAQ suffered exponentially, because they've had outside movement with COVID restrictions and things like that, and everyone moving to technology for purchasing and everything else. But that's going to be problematic. You also have the horrible numbers for the economy, and as you fade with consumers and don't give them jobs, makes it harder to sustain these kinds of moves. So that's getting much closer to the 0% than the S&P even. And again, an additional spike up of weight, not what a long would want to see. That's not a buy picture at any stretch. So what do? Do you move your money back into treasuries? Well, we saw a slight uptick back, which drops yields just a fraction, but that's where safety is going to want to go. In a situation like this, or more likely, you would think about other currencies, but the Eurozone is a disaster, as we've talked about repeatedly, and now back into that normalized range, which not going to make the Fed thrilled, but everyone's got to buy dollars just in case, so that they have them in supply should anything happen with where things are going. And the real catalyst to wanting to sell is the spike that took place back in oil and getting it back up there. They thought maybe there'd be a retracement, but no. And if that starts to continue to break out higher, you can see with the decline of the white, the potential for that is still there. And that would put additional downside pressure. So a lot of movement started back into Bitcoin, which had traditionally been sell, but we may see some additional selling out of Bitcoin now because of this latest market drop. Like I've talked about, people using it, or at least market makers, as hedges, and then having to sell some of that to cover margin situations. And in this particular case, with that kind of sell-off, we'll know a bit more tomorrow whether or not some of this pushback up starts to fade. We can already see the weight NDI spiking at the 30 level right there. So potential for that to be a problematic. You'd want to see the DOC cyan move above green to give that continuation trigger, because it had an excellent buy setup with the cyan over, cyan under red, which is always buy, and the rising green, and in this case, mid-term buyers as well as long-term buyers from the red DOC. All were spiking up, which led to this setup, but market conditions change, and that could have an impact. Looking at the end of the day, this is where the market just finished in post-market, so I attempted a little bit of a pop going through there. Didn't do that much for it, and literally right back at it, and we could see that continuing to move to the downside within this current setup. Scrolling back, let's look at where this all started from in the excitement. So we had this rise that took place there. We ended up with this was from the previous end of the day, and it bought up under a lot of positive extremes. And as we talked about, we were looking for this setup where you get the white spike, was expecting a move back to the 0%. And as we were talking about these pivots that are lower of the blue NDI below the 25 level, that cyan line you see there is at 19. And sure enough, that's where the orange dots appear, and that's just lower. Fought back and forth. The 0% started to rise a little bit. Secondarily, we ended up with the exact same configuration again, this time with a stronger MDI white over magenta peak, and that drove it to the 0%. And then every time we got any type of bounce, we ended up with the white MDI spikes. And as we know, the expectation for those is to the 0 and beyond. Then, of course, you have your yellow dots. Now, you're going to find yellow dots available in the new indicators under the Catfish et al. Program. And they're also set up to where you can turn off any ones that you don't want to see. It was pretty straightforward with that. The yellow are continuations below the 23%. The whites represent MDI weight spikes above the 33 level, and when they turn red, like over here, is when you have DOC cyan still leading the way. It doesn't mean that they aren't going to be short. Usually you just have to wait for a little bit of confirmation, i.e. that magenta and yellow dropping below the 33 level, and I particularly prefer also to see orange do that, and that usually is enough catalyst to get that going. Ideally, you then also want to see that DOC spread, which is the cyan moving above green right there. And sure enough, that worked out quite nicely. These magenta on the 0% represent the weight crossing above red. It just becomes a quick visual to see where, when we get into those cell configurations, you might get the signal. Oftentimes you'll get either dark red candle or the purple ones, signaling the same kind of short setup. And what was fun in this one too is we ended up with these orange dots, and I've talked about this before. If you get the pivot back up of magenta, now oftentimes this upside divergence, anywhere from 6 to 14 points typical as the range. The outside of it, upwards of 18. But still, doesn't change when you get those spikes above 33 of the white, that expectation of the 50%, which feel filled beautifully. And then we ended up with another little spike, but this time you got the white above magenta, and that usually calls for a lot more severe action towards the 0%. And that was what, at this particular stage, we were talking about the 0% as being the target. And it fought back and forth and around, but at the end, once that selling started, you can see the yellow line stayed with us the entire way, the yellow dots suggesting that none of this was a turnaround buy yet. And that's something that I'm working on in the new MBI pink bar. Will reflect my adaptation of these dots into the colors of the pink bar, which hoping to get that done. We were active trading and a lot on the Skype chat, so hopefully I'll have that and be able to get that worked in. If not, within the next couple of days, I will have it. And so at least you'll already have the MBI pink bar, and I will just send an update to the MBI pink bar, and you'll have the adaptation as soon as it's created. From a 50K standpoint, we have the Opus, in this case called 15B, but I've moved it into the Opus 2T. So that one that you typically used will still be the same. And this is what it is in default settings. Make sure that down a little bit more so I can swap out those numbers for you. And this is just basically for the year so far. And we can click to the performance summary. So just about 2.0 profit factor, 2.11. 1.78, just over the 50% category with that. And what was nice about this setup too is 73% time in the market with a 220 RINA index. So very healthy from that standpoint. I don't know, it's currently in a trade right there from the short side. And what's unique about this one too is if I go to the studies and the strategies part, you'll get a chance to see that if we look at what's inside of it for customization, you have an enormous number of inputs that go with each of the different buy setups, and then down at the bottom with the number of red short setups. And so a lot of these values have not been optimized, but they don't affect what the signaling is, just some of the ranges that fit in between this. So whether you're looking at a 5K chart, some of those may want to rise or go down simply because of the faster nature or the larger extent of the moves. And that would just improve them. I think at one point I did that, and it moved the win rate up into the 54-55% on the long side, and over 50% or right at 50% on the short side, which is incredible when you're looking at those profit factors, because if you're risking $1 and getting 2 back, you're doing pretty darn good. And even if you're just flipping a coin on your win-loss rate, but that's a little misleading on some of these, because some of these little micro short setups, when we have the adjustments of the yellow and that, it'll stay within that shorter trend and stay with it. So it will certainly improve those numbers dramatically as soon as I have the pink bar adjusted to the dots, and then I can adjust the studies for the strategies to it. So all good from that aspect. And as always, though, you'll see me on Skype chat, and so we can go over a lot of these details if you have any questions about them. Trade well. We'll talk to you later.